Jamie, I got a question for you to start this interest rate announcement podcast, January 29th, 2025. When is it time for the variable rate holders to start laughing?
Oh, geez.
Are we there yet?
Not yet. No,
we're not.
Not yet. No. But their pressure's off a little bit. You know, if your payment was fixed and never adjusted, you've probably seen your amortization go down a couple hundred months. From the peak to now.
I would say the trauma of not locking in a fixed rate when the rates were 1.9 to 2.3% is slowly wearing off as rates come down. Mm-hmm. And every time we see a quarter point reduction, we're very excited to share that our payments are coming down $15 every $100,000 worth of mortgage that you have. So over the last now 7 months, we've seen 2% interest rate cuts, which 8 times 15 equals what, Carl?
quick math.
120. $120 over the last 7 months that your payment has come
24
down.
24 cups of coffee a day?
There you go. Per $100,000. So if you have not heard, the Bank of Canada reduced the overnight rate again, 0.25% this morning. And now that rate is sitting at 3%, which puts the prime rate for most banks at 5.25, which is what your variable rate mortgage is working off. Good news for people wanting to move around the city this year.
Yeah, I think that this is enough to get a lot of people off the fence. And I think we're going to see a much busier year than we've seen the last two. Feels good to be back in the podcast, Denny. I mean, this is our first time recording this year. And there wasn't much it's hard to do a market update over Christmas and over the holidays. Yeah. So we really wanted to let see some January sales, have some activity to talk about, because if we did this podcast 2 weeks ago, we wouldn't know the rate announcement. We wouldn't really have any data to go off of it. And even when I look at these sales that are taking place this calendar year in January, I looked at like 40% of them are listed last year, right? Yeah. So we're still very early days in the year, but this is a step in the right direction. And I think, at the rates where they're at right now, I think a lot more people can afford to upsize their space. And that's going to start showing its colors in the market. We're already seeing it at open houses that we're having. Yeah. But yeah, I guess the interesting question is, where are rates going to be at the end of this year?
So let's just touch on where they are right now. This is the first time in over 2 years that 5-year fixed and variable rates are essentially the same now. So your typical variable is working off prime, which is 5.25, and what you're typically seeing in terms of reductions right now is 0.6, 0.7. So your variable rate is going to be in the range of like a 4.5 to 4.65 right now. And your 5-year fixed rates are pretty commonly in that like 4.3 on the insured side to 4.5, 4.6, which is basically identical to variable.
Yeah, I listened to something where I think it was, man, don't hold me to this completely, but I think a lot of people are choosing variable rate mortgages right now, which the banks are not giving as much of a discount on the rate because of the risk that their portfolio is starting to show. So I guess what that means is, there may have been a time not long ago where you get a prime minus 0.8 or 0.9 on a closed variable, but that might be moving to prime minus 0.6 or 0.55 as I guess these banks need to make more money or alleviate their risk with their portfolios. So that could steer more people towards what we've been chatting about, the 3-year fixed as being a pretty common option for most. But, these banks seem to do a good job of really making the rates at a point where you have a tough decision every time. How do you want to position yourself in 3 years versus take the closed variable now and hope that you win? It's hard to be confident that one path is better than the other. What are you seeing?
Where do we think rates are going? Do we think the next meeting, Bank Canada meets every 6 weeks. The next meeting is March 12th. Will there be another cut March 12th?
I'm going to stop trying to be an expert on this topic.
No.
I think if the world was centered around Vancouver real estate, they could get away with stopping cuts and let the market take its course for this spring. But it's not around just Vancouver real estate. I think Vancouver real estate is going to be strong when other parts are not. Where are they at? They're at 3.3% now. I mean, they never really stay in that sweet spot. They seem to go high or low when you look at the history. So if I were to take a guess, I think at some point this year, we're going to see more cuts. And I think it's just because we're going to need to stimulate more of our economy and more construction and more housing starts.
Yeah.
But I'm not an expert on this, but if I were to guess, I would say it's probably going to be later in the year. And purely just to maybe avoid a really hot real estate market in the spring, because if they keep cutting, we're going to see prices climb probably a little bit quicker than we want to, or than buyers want to.
I think we're going to see one more in March. I think we're going to see another quarter point cut in March, and then it kind of level off and plateau for the next 3 or 4 meetings.
Yeah.
And then I think they'll reassess in summer, early fall.
I think they're going to have to cut more in the next 12 months, call it, to really, achieve economic stimulation and bring things back. But in the short term, they can get away with easing up on that. And I think the spring market in real estate, at least, will be much more active than it's been. I think we're going to start seeing months that start getting above that 10-year average in terms of sales volume. But it may not be like blow it out of the water. It might just be going from consistently being below that 10-year average sales mark to hovering around it, some months below, some months above. And that will probably depend on the supply listings too. And realism of sellers, whether they want today's price or yesterday's price.
Totally. Talking about 10-year averages, October, November were the first couple months that we've seen in a couple of years that were kind of at those levels. And yeah, as Jamie said, we're kind of expecting that to continue through 2025. It is already showing signs that this year is going to be much more active in terms of sales, in terms of just the activity of people coming through open houses and new listings, how quickly things are getting accepted offers or getting offers comparatively to this time last year. And I think this is the year that it turns. I know we said that last year, and being in the real estate game, we're always cautiously optimistic, I think is our natural tendency, but it just it's a different feeling this year. Even the amount of phone calls that we're getting the first few weeks of the year from people that are wanting to move around the city, the urgency is different in those phone calls. The urgency is, the last couple of years, those phone calls were, we might make a move in the next 6 to 12 months, to we're ready to move tomorrow. What can we see? What can we see that is available right now?
There's been a lot of people on hold in the last 2 years. There's a lot of people that want to move, and whether it's upsizing space or downsizing space or even relocating, getting out of the city. I think there's a lot of people that have just been waiting for the market to be better. And for buyers that, a buyer wants a down market to buy in. So maybe for buyers, it's more about being able to afford, qualify for the mortgage they want to get the property they want. But for sellers, I can speak, we've had these conversations. There's a lot of people that have most of their net wealth into their home, and they just don't want to sell it at a bad time. If you have a single family home and, you sold it last fall versus this spring, I think the difference could be a 5-10% swing between the two options, depending on the house. There still are products that I think will struggle throughout this year. In Vancouver, there's lots of little mini micro markets, but family housing seems to be short in supply and high in demand. And family housing, we're not talking about luxury homes. We're talking kind of entry-level townhouses and houses on good streets and good areas.
Yeah.
And we had an open house for a few of those last weekend, and more turnout than before. A lot of people came out. So just more shoes at the door, more people showing up at open houses than we saw in the fall.
There's some specific stories from early in the year that we'll share on the next market update podcast. So stick around.
Don't want to get ahead of ourselves here. Okay, so stay tuned.
Anything else on interest rates though? That's kind of it. There's the summary.
More affordable. Step in the right direction. More first-time buyers coming up. Yeah. We're going to see, it's an election year too, so we're going to see if any other regulations get lifted or any other changes come.
Yeah.
I think it's been an eventful time.
Yeah.
But yeah, we'll see if another quarter point next announcement, Denny. That's your bet.
Say the one thing we didn't talk about. We talked about your monthly payment being reduced every $100K that you have in a mortgage, but we didn't say exactly what that payment looks like right now. And every $100K of mortgage right now looks like it's about a $500 per month payment, give or take, depending on interest rates.
For $100,000 a month.
Every $100K.
Yeah. Yeah. So,
And that is down from, oh man, what did it peak at? 650, 675
yeah.
when rates were in the sixes. So
and before
significantly different. Yeah.
before rates shot up when it was at the low, it was 340, 350 per 100,000.
Could have been lower. Could have been
Maybe even
325.
lower.
Yeah.
So the cost of $100,000 of Canadian funds has definitely been volatile. And even, as we're talking about prices, our price is going to go up, or like in the last 2 years, prices have been relatively flat.
Yeah.
And if you look at the value of our dollar, an international value, our prices are going down. They have been going down, just not in Canadian funds. So, and in some cases they have in Canadian funds, but if you're buying our houses in US dollars or Bitcoin, it's definitely gotten a lot cheaper. That's it, Denny. I guess we'll wait and see what happens in the world of interest rates, but January's off to a predictable start.
Next meeting, March 12th. Looking forward to another cut.